welcome to the Deep Dive. Today, we're taking a look at something quite interesting happening in the U.S. economy.
We are. There's this noticeable return, almost a surge, in consumer optimism.
Yeah, it feels like maybe that cloud of economic worry we've all been under might actually be lifting a bit.
That's the big question, isn't it? So what we want to do for you today is really dig into why. What's behind this mood shift? Where is it actually showing up?
And crucially, is this smooth sailing from here? Yeah. Or are there still reasons to be cautious?
Exactly. We've been looking at the latest consumer sentiment reports, economic data, and Chris Lehnes' analysis has been really helpful in putting some pieces together.
Our mission really is to pull out the key insights for you, help you get a clearer handle on the economic picture right now, and maybe what that means for your own financial outlook, or just understanding the economy better.
Okay, so let's kick things off with the numbers, because they really do tell a story here.
They really do. Take the University of Michigan's Consumer Sentiment Index. Big jump in May 2025, right? Like 9%.
And 14% higher than a year ago? That's not a small change.
No, definitely not. And it's not just one survey saying this.
Right. The Conference Board, their Consumer Confidence Index, hit 118.2. That's the highest it's been since, early 2022?
So a pretty broad signal then. People are genuinely feeling a bit better about things.
It seems so. And I think what's really interesting is why they might be feeling better. It goes beyond just a general feeling.
You mean like inflation expectations?
Exactly. They've dropped to the lowest point in over 3 years. That's huge because what people think will happen with prices really influences how they act now.
Right. It affects spending, saving, even how businesses set prices later on, maybe.
Precisely. And it can influence wage talks down the line, too. It sort of feeds into a potentially more stable environment if that expectation holds.
Okay, so inflation worries are easing. What about personal finances, jobs, income?
Also looking up, we're seeing more optimism about future income and definitely about job security.
I saw a stat, something like 45% of people saying jobs are plentiful.
That's the one. That feeling that jobs are available is, well, it's fundamental for confidence, isn't it?
Absolutely. So you put plentiful jobs together with lower inflation worries, that expected rate down to 3.2%.
Yeah, it starts to make sense why over half the people surveyed are saying they feel better about their financial future. It feels concrete.
Okay, so we have the positive sentiment. Let's unpack the drivers. What economic gears are actually shifting here?
Well, top of the list has to be inflation actually cooling off.
Right, that CPI number, 2.9% year over year now. A huge drop from where we were.
A massive drop from over 6% just 2 years back. When everyday things cost less, or at least stop rising so fast, it makes a real difference to household budgets.
Frees up cash. Simple as that.
Then there's interest rates. The Fed heading pause on hikes, that seems important too.
And the market even starting to whisper about potential cuts later this year.
Yeah, that anticipation alone eases pressure, makes mortgages, credit cards, car loans feel a bit less daunting, improves the overall financial picture for a lot of households.
And the job market itself, just holding strong. Unemployment staying below 4%.
Plus wage growth in quite a few sectors. That combination, job security and maybe a bit more income, that's powerful for optimism.
We should probably mention the stock market too, shouldn't we? It had a pretty good run in 2025, especially tech and green energy.
Definitely. That famous wealth effect. When people see their retirement accounts or other investments go up, even if they don't touch the money, it just makes them feel more secure.
Sort of a background boost to confidence.
Exactly. And much more immediate, you've got lower energy prices.
Oh yeah, gas under $3 a gallon in lots of places.
Yeah.
That's noticeable every week.
Very noticeable. Lower utility bills too. It all adds up, giving households more breathing room financially.
And maybe, just maybe, things feeling a little less chaotic globally, supply chains getting back to normal, fewer big shocks.
I think that plays a role too. More stability, less uncertainty. It helps create a calmer backdrop for consumers.
Okay, so the feeling is better, the drivers seem to be there, but are people actually doing anything differently? Is this optimism showing up in spending?
That's the key question, isn't it? And yes, we are starting to see it translate into action in a few areas.
Like retail, people buying more stuff.
Seems so. Spending on things like clothes, electronics, home goods is picking up. Retailers are reporting better numbers. Online spending keeps growing. It suggests people are a bit more willing to open their wallets.
Even housing. That market's been pretty tough.
We're seeing some, let's say, green shoots. Mortgage rates dipped a bit, and that seems to have encouraged a modest pickup in home buying. Housing starts are up too. Builders feel slightly better.
Still tough on affordability, though, I imagine.
Oh, absolutely. That's still a major hurdle. But there's some movement. Same with the auto industry.
Right, recovering from shortages and those high financing costs.
Exactly. Sales are bouncing back, and interest in EVs is still really strong, helped by incentives.
And what about experiences? Travel, going out?
That seems to be where a lot of the renewed spending is going. Vacation bookings are surging, hotels are fuller, people are spending more on concerts, dining out, events.
A clear sign people feel they have a bit more discretionary income, or maybe just pent-up demand being released.
Probably a bit of both. It suggests a desire to kind of, live a little after tightening belts.
Okay, so the picture is definitely looking brighter, but we said we need balance. What are the potential storm clouds still on the horizon?
There are definitely things to watch. First off, while overall inflation is down, core inflation is still sticky.
That's the one that excludes food and energy, right?
Right. And it's still running above the Fed's target. Things like services, healthcare, rent, those costs are still pretty high for a lot of people.
So the inflation beast isn't completely slain yet.
Not entirely. Then you have the global situation. Geopolitics are always a wild card.
Yeah, tensions in Eastern Europe, China, Taiwan, the Middle East. Any flare-up could easily spook markets and consumers.
Absolutely. Domestically, we also need to keep an eye on debt levels.
Credit cards, specifically. I heard they're at record highs.
They are. And what's maybe more worrying is that delinquency rates, people falling behind on payments, are ticking up, especially for younger folks and lower-income households.
Which points to another issue. This recovery might not be benefiting everyone equally.
That's a really important point. The headline optimism numbers might mask significant struggles for many people still living paycheck to paycheck. It's not a uniform picture.
An uneven recovery has its own risks.
It certainly does. And finally, looking ahead, you've got political uncertainty. The 2026 midterms aren't that far away.
Right. Potential changes in tax policy, regulations, government spending.
Yeah.
That always creates some unease for businesses and consumers.
Definitely adds another layer of wait and see.
So pulling all this together, this brighter consumer mood, what does it actually mean for the wider U.S. economy? How significant is it?
It's potentially very significant. Consumer spending is, around 70% of U.S. GDP. So how consumers feel and act is a massive driver. Sentiment is often a leading indicator.
Meaning if people stay optimistic.
If this holds, it could really power stronger economic growth, especially in the second half of 2025. More spending means more demand.
Which could encourage businesses to invest more, hire more people.
Exactly. Particularly in those sectors seeing the spending, retail, travel, services. It could help solidify that soft landing scenario everyone's hoping for after the inflation fight.
A smoother transition back to more normal growth, ideally.
That's the positive outlook, yes. Sustained optimism, backed by those economic fundamentals we talked about, could pave the way for a more stable recovery.
Okay, so let's wrap this up. What are the main takeaways for you, our listener, from this deep dive?
I think the core message is that the data really does show a genuine rebound in consumer optimism. It's not just wishful thinking. It seems fueled by real factors like cooling inflation and a strong job market.
And we're seeing this translate into actual economic activity, more spending, particularly on experiences and discretionary goods.
But, and it's an important but, we can't ignore the risks. That sticky core inflation, the global wild cards, the debt situation for some households.
And the fact that the good times aren't necessarily being felt equally by everyone, plus that political uncertainty down the road.
Right. So while the trend is positive, maintaining it requires continued progress on the economy and, frankly, a bit of luck on the global stability front.
What does this mean for, say, businesses or policymakers?
For businesses, maybe it's about meeting consumers where they are optimistic, but perhaps not extravagant. For policymakers, it's acknowledging the progress, but recognizing the need to keep working towards a recovery that feels real for everyone.
So the final thought for you to ponder, given this uptick in optimism, but also keeping those potential challenges in mind, how does this evolving economic picture influence your own financial view? What decisions might you think about differently in the coming months?
And what signals will you be watching most closely? Inflation numbers, job reports, something else entirely?
Definitely food for thought. Understanding these shifts is key to navigating what comes next.
Indeed, it helps you make more informed choices.
Thanks for joining us for this deep dive. We hope you found these insights useful.